Right, welcome everybody. Sorry for the late start, but let's get going. And not a lot of data. So we've got non-farm payroll out of the way. We'll come to a couple of issues that come out of that in a few moments. Obviously US and Canada away on Labour Day today, so they join us tomorrow. So we got Japanese GDP still looking to be a negative figure, and that's already impacted on the yen pairs today. There's some quite nice moves, we'll come over that in a minute. And Chinese trade balance, otherwise not a lot going until we get to Thursday's UK rate decision, and nobody's expecting any change in the rates for the UK. Just may see a difference in the voting, that's all, which could have quite an impact. What tends to happen is that the statement is when the markets really start to react to that, so we'll look at that on Thursday nearer the time. Okay, so not a lot of data. Let's start off by let's kick off with the Dow. Okay, it was shut today, so let's just see where we are anyway. And let me just position this chart. Okay, so we have come off of 18,300. We've seen a low of 15.2. If we put fibs on this high, and I'm picking this 2011 low down here, and you can see the most recent low has picked off the top of this fib zone here. So we saw this distribution pattern, and then we have one significant week, and the second week we had sort of an impulsive move down there and pulled up. Now, a lot of people tend to think, if you're a bull, you're going to think that, wow, that is a great opportunity to get long. And if you did get long at that extreme low, which was very, very difficult to do based on how the markets are behaving, i.e. pretty rapidly, pretty violently, then that was a good entry, and you could have even got out within that same week for something like a 750 point profit. But what I'm seeing here is a market that, we'll stick with these fibs because these fibs are picking off it's capped the move up from the 3rd August week there, and then we saw a close below it last week. And of course we're just hovering, waiting for the US to come back to the desk tomorrow until we get a decision out of that. What do I think is going to happen? I think we're potentially in for quite a sloppy time for at least another week, because we now need to wait for the September US rate decision, and I think it's about the 16th or 17th. Hang on. So we've got retail sales on the 15th. Core price inflation on the 16th. Okay, there we are. Yeah, 17th. Economic projections, statement, and rate decision. And here, Forex Factory have penciled in a 25 basis points increase here on the 17th. Okay, so that's Wednesday of next week. So I think with that in mind, we may see a push to the upside. I mean, the trend is clearly down, particularly with that bearish close last week, but it was but we may just get a push a little bit higher, possibly into this 100 EMA, at which point, if markets don't like whatever happens on the 17th, whether it's a rate rise or not, then we could start to, I think at some stage we're going to retest these lows, 15,280. We may push in a little higher before we start getting down there. My personal angle on this is I think the Fed needs to raise rates, possibly even a 10 or 15 basis point hike, mainly just to put some confidence back in the markets, because I think the markets are pricing in a rate rise, hence one of the reasons why we were seeing a drop. Obviously not the only reason. I think if you give the market what it wants, I think you may see a push back down to these lows, but then I think into the autumn we may see a pullback up to these upper levels down here. So I'm basically looking, what I'm saying is I think we could eke our way up a little bit into next Wednesday, drop back down to these lows, and then potentially wind our way up back into the autumn before we hit resistance, and then mid to late autumn potentially roll over. That's one scenario. Another scenario is we've got this week close here, we could just see a little incremental push up on tomorrow, and then just drift lower into the 17th. Either way, it's a little hard to call. I think whenever you get a trend like that, just short any highs, just short any pushes high, on the basis that if it works, the shorts worked up here, then keep shorting until it stops working. Let's go to the daily and then see what the daily is giving us. So the kind of areas I'm talking about for shorts, to be more specific, is well, this is an obvious one here on Thursday's close, but I think I've talked about this for ever since we came down here. I've talked about pushes into the 20 EMA, and I'm not going to change my tune now, so I would even start shorting on a push into these levels up here, and if it doesn't work, I'll leave it and then see if I can get short around this area here. Okay, the case for sampling, what I suggest you do is go half size on any up moves and full size on any short moves. Half for longs and then full for shorts, and then just pick up these areas here. If that doesn't work, then certainly I will be looking for that to push up here. Now Elliott wave, which is always interesting to try and plot. Sometimes not easy, but if you can pick up on what the Elliott wave may or may not be doing, it's worthwhile. Let's forget all of this for the moment, because this was just one huge box that we spent, a good half plus of 2015 in, and obviously we're down in this box here. Hence the reason why I'm looking at this area as a short and this area as short, because I want to short inside the box area. Case for the bulls, well, we have got push up here, and could get another push here. So I was going to talk about Elliott wave. I got distracted. Let me talk about Elliott wave. Okay, so I'm taking this wave as wave 1. I'm taking that pullback as 2, this drop as 3, and then somewhere around here is 4, and then 5 I'm looking to be quite an aggressive drop. So again, that reiterates the levels I'm looking at. I'm looking at here and somewhere around here. I can only be more specific once we at least get tomorrow open. But the European markets have opened well, so excuse me. European markets have opened well, so potentially the Dow could follow. Okay, let's have a look at the DAX. Is looking very, very similar. So my plan for the DAX is similar also. You can see from the extreme RSI reading here, we are just pushing up, but I think even a midway RSI reading could be enough to see this leg down, and to translate that will be into this kind of area here. I mean, for it to come up here, that will mean cracking through the 20 EMA and then coming in contact with the 50, which makes sense. And traditionally the 50 is the mother, traditionally. Sorry, I'm just getting rid of this. Hang on. Right, moving on. Let's kick off. Any questions punched in the questions box? Let's just move over to gold for a second. And gold is also showing the potential for a stronger dollar. It was at this point when the pound ran up and ran into resistance and started seeing a lot of selling. So we've got a typically divergent relationship with the gold. Where do I think the gold's going? We are testing a huge amount of support here. I think we may see some initial moves up here back into this resistance, and then see some further legs down. So the idea with any market, particularly if you're a bear, is to get short as high as you possibly can. That's the name of the game. So hence the reason why I'm just looking for some areas that I can wait for and then pounce. Alright, let's have a quick nip through Forex. US dollar yen closely follows the indices, and you can see the indices mirrored. Excuse me, I don't know where that yawn came from. You can see the indices mirrored in this chart here. So a crack into 120.50 could see that just roll over. US dollar CAD, a minor breakout today into resistance. I mean, the indicators are not great. Got a divergence going on here. As that's crept up, we've seen lower highs in the RSI. The MACD is running out of steam. However, that is in a very quiet market today, at a higher close. So I think if that gets a pullback to something like 220, so an 80-point drop in a consolidation like that, that's what I would normally expect. I think that could pick up. In the meantime, switching to the pound and the euro, that's a significant push up. I mean, that's closed higher than non-farm payroll Friday, because the Bank of England over the weekend said they would not be governed by what's going in Asia. They would be governed by what's happening in the home market. In other words, you know, the view is that the UK is getting closer to a rate rise. So that's a pullback, and with it's a rubber band trade. We're some distance away from the moving averages. So if we can buy a pullback to 220 tomorrow, and let's see if we can test the 400 mark. And again, I think that can at least drift into potentially into 155 for the next week until we hit the rate decision. Euro. I'm just finding this euro a little bit tough to trade. We're trapped between two fib areas, 230 and 180 is a fib area. We're trapped to moving averages, so I'm just steering clear of it. Euro yen. So we've got any significant. We didn't look at the pound yen, did we? Similar, low RSI, MACD, it looks as if it got too extended, so we'll at least see some kind of bounce. This is obviously a tough area. If we can get to 136, potentially a great area to get short. I don't think we looked. There's the pound yen. So same story with the RSI, the MACD. The markets have picked off a key level. You see a lot of history going right back to this bar up here, which is 12 months ago. So 12 months ago we peaked, or nearly all bar a week, and then rolled over. But yeah, it's a significant bar. It's not as bullish as the pound US. Pound US has got a stronger look to it. Let's just cross some of the other pound pairs. So pound Aussie, that's had a reasonable move, coming into a lot of resistance. Would I trade that? It does look as if we've got some symmetry here. We dropped here, pulled up, we dropped, pulled up, dropped, pulled up. So it's pretty high, but if gold is going to roll over on the back of a strong dollar or stronger dollar, then it stands to reason that could still have further to go. And if you look at the weekly on this one, yeah, this is a sweet move. The weekly is very extended, but yeah, if you look at resistance levels, at 224 is huge level, and so it's hard to see at this stage more buyers coming into that. Elliott wave, 1, 2, 3, 4, A, B, C, D. No, I'm clutching at straws here, to be honest. Let me see. Well, this is a three-wave move here. 1, 2, 3 wave there. And we've got the A, B, C correction here for the D wave. So that was a good Elliott wave. This one, I suppose if I call that a 1, a 2, a 3, a 4, and a 5, that would have made sense. Yeah, calling this, yeah, I think that's where that was quite a significant pullback there. So where does that leave us? That means we're basically still in the impulsive wave D at the moment, but with resistance above. Back to the daily a second. It's worth looking at this for other patterns you may or may not see. Wow. I think there are better chances out there. I would actually rather risk my money on the pound US at the moment than buy that high. So we'll have to leave it. Right, let's move on a little faster. Euro we've talked about. Euro CAD. A sweet move up there. I mean, if you bought a pullback to 800, it's got the potential to go a couple of hundred points higher. I mean, certainly, the major resistance is some way off. I think what might happen is, the danger is with a chart like that is that you've got so much localized resistance here that your risk order ratio is rubbish. You're going to hit the barriers before you get too high. Right, let's move on to... So out of all of that, I'm only really looking at a pullback on the pound at this stage. Pound US dollar. Otherwise I will steer clear of that. And the DAX, you can see why we're struggling here. So I'm just backtracking a little bit. Yeah, we talked enough about that. Let me move on. Right, stocks. The scan I've done is on the housing sector, the US housing sector, and the ones I'm interested in are, these are homes. It's already come down from 21. I'll use these charts for now, and then I think if they're really interesting I'll flip to mine. I like the huge trend line here. Sold on Friday because of the threat of a rate rise getting closer. I have to say, we are late to the party on this one. Notice how it was so bullish up here. But that's a very impulsive run there. Right, so I will get this up on my chart because that one's worth looking at. You don't really need fibs for that, because if you look at the high of July last year, actually sold off a similar time. And how could you trade that? I think it looked really dicey trading here, because impulsive move up, gaps down, and then you get that sort of inverted hammer, a stopping bar. The way to do that, if you see that kind of move, is just wait and see how it reacts to these resistance levels. And they started to get very feeble here on July 14. Closes below the next day, so it engulfs that push up. So 1970, 1960 was a good place to get in. Had you stayed the distance on that, you would have got a fairly decent chunk of that. if we now fib that, you can see how we start coming to the fib zone here on the 16th. We hold it on the 15th, but a little excursion into that zone before it drops the rest of the leg. So the setup there, the pattern that I'm interested in is it's a B wave, Elliott. There's the push up, there's the sell, that's the pullback. So that's wave A, that's wave B, and C is the one that gives, generally the one that pays. So it comes into the 50%, it pulls up, struggles, sells again, and just winds its way down on a very neat zigzag pattern. But these patterns up, this setup up here, particularly around just under the 20 number, is a good place to get short. So the question is, what are we going to do with it now? Okay, so that's all well and good with hindsight, but what are we going to do with it now? I think if that can push up, we've got to push up in the markets, push up in the indices, and that starts to get to 1790. I would want to get short. At the moment we're staying within the range of this big August 25th range. So any push up into 1750, 1780 is potentially the next leg down on that one. I'm just updating my records. Okay, the other one I like is this one. Moving a bit swifter, just go through this sector quite fast. CCS, Century Communities. This one's potentially more interesting. Sitting on support. Actually, that's quite a messy chart. Now I've gone off that. I do like clean charts. That was such a violent move down there at 1720. I am going to bypass that one, so scrub that. CVCO. Okay, that one's not coming up. That's what this one will. One of the bigger house builders. This is a good chart, yeah. This is interesting. The Friday bar was a nice short signal. So any pullback into that 51 is good. And your stop is going to have to be 52.10. I would actually give that a day, just in case we get a gap fill. Because if the indices have a good day tomorrow, this one could just recover a little more. I don't think it will. Actually, it's such a good short signal there. What do you think to that one? Would you take that at 51, or would you wait until give it another 24 hours or so? Okay. Yeah, let's wait. Let's see if there's any other chart pattern here. Yeah, there is. There's the wedge. We'll give it at least 24 hours and we'll come back and watch that one. Right, a couple more. Meritage Homes. I think this is a potential bear flag. And we have a significant drop and it's really struggling to get back above 42.25. And that's got the potential to, that's sitting on 50%, okay. That would be great at 43. If we see it. So let's just wait for 43 on that one as well. Great cluster moving averages to potentially hold that one back. Right, I want to move on to oil. Let's look at oil first. This is the October contract. Let's just move that to there. The 43 seems to be a major pivotal area here. So 43 was resistance, it's now support. So if we come down and do another retest of 43, then I think we can go to 50 plus. If the reason why I'm looking at oil now is because there's a couple of oil stocks I've identified that I think is interesting. Let's have a look at rig. Got a divergence going on at the bottom. This was divergent here with the RSI and the MACD. And so a nice push up from the 26 into 14. I think the place to get in I'd want this to drop lower. I'd want that to drop to the 12 and then see if if oil is still holding up and look as if oil can go further, then I would get into rig, and that will complete a head and shoulders pattern, and then my target would be 15. The other one I like is Patterson. It's closed above the 20 and then pulled right back. So if we get a close above, if we hold this 1450 area, I would risk a long to see if actually, yeah, it's just so weak, it's not been able to bump into that trend line. I'm going to keep these oil stocks in the back pocket and just see how oils react. The other one I like is Conoco. This is a decent push it's had here. There's a gap to be filled, 43.50. So I would actually set an alarm on that. Let's see if we can do a gap fill. Begs the question, is that shortable? Yes, it is. I think that's a short at 47.70 to see if that can fill the gap. $47.80. I'm actually going to take a short on that one tomorrow with a stop above 50, and then I'm going to flip it if we come down here and hold 43.50. Right, any other stocks? Any stocks you're looking at? I've got a couple of other sectors I'm interested in. The miners are not doing much. We've looked at the miners before. Vedanta had a good push up into that 200. And Fresnillo just couldn't get going. So Vedanta is at real relative strength. I do like stocks that react well in a sector like that. And if the gold did pick up, I would come back and look at Vedanta. In the US, we've got Gold Corp. I don't like the stock. I'm going to leave it. BHP. No. The other one I want to look at was yeah, okay. Let's look at the health sector. Like food as well. Tyson. Potash. That was one I was interested in. If you pull back from this one, pull right back, and then start to drill down to what's going on this one. And this has been, you know, a really good trending stock. This is in line with the commodity rush, and particularly the grain rush in 07-08. This was the darling of, this is a good day trading stock. Fell out of bed here. But we are just looking to see, I think longer term the grains are going to do really well. Obviously we're even past harvest time now, so this is not one for now. This is one for the sort of real longer term situation. Let's see what it normally does this time of year anyway. Yeah, you see that the bigger picture for a stock like this would be the back end of, you know, the early part of autumn or mid-autumn, as orders are starting to come in for the next growing season. So that's, if we start, again, we've got a gap there at 24.80. I'm going to set an alarm for that gap fill, because I would actually buy that gap fill. 24.75. I would actually buy that and see if that could recover. See if I can hang on to that. What else have I got? There's just a couple of quickies and then we'll fold up. Of course, I'll be interested in any questions you've got. Well, the health sector has been on an absolute storm for a while. I don't see it fading much. And this one here caught my eye. Ziopharm. This was had quite a tumble. So it had 1, 2, 3 legs up, gets tired, as you can see from here, falls off a cliff. It does a gap fill. The gap is here, and it fills it on that impulsive move on the 5th, rolls over, and then we start putting in some buy signals down here. I would risk a small position on this one. Kemp, okay, yeah, that's on my list as well. I would see how that one looks and see if we can hold 90. Quick look at this one, then we'll move on to your Kemp. And keeping an eye on this one as well. That 997 is massive support, and if it does, I think that will find buyers down here. And if we break out of that pattern, we could even make a new high on that one. Elliott, 1, 2, 3. A, B. So A, B, C wave correction. The D wave, if we can start closing above here, could be significant. Right, your Kemp. Very similar, yeah. That's same story as Ziopharm. Ooh, potentially even more support. Yeah, I like it. I think that's a good call. That is a decent wedge pattern. I would, yeah, that's definitely going on my list. That's a good one. Very near support. In fact, this is a rubber band strategy. You know, buyers, if you want to buy this, why not risk a position at these lows, particularly if it just dips down there. Take a small position and mark a lot. But I would suggest even Friday's lows, 32.60, 32.70. I would do what's called a marker lot, i.e. something that you won't be that bothered about losing the position if you get stopped out. Your stop's got to be under 32. If it works, add to it. If it doesn't, get stopped out and leave it, or just carry on watching it, but don't get too involved with it. Let's just look at Apple, because I day traded Apple last week. Let's just, unless you've got any other stocks to look at. Yeah, so I day traded Apple. I bought Apple Can't remember the exact price now. I think it's about 90 something. I bought Apple at this massive support. I just ramped the stop up and let myself get stopped out just underneath that 20 EMA, just for an overnight day trade. It's worth watching. What I don't want to do is suddenly, you know, I am bearish this market, so I don't want to talk about longs. I do want to look at that housing sector and see if that's an option to short on any kind of rebounds. The 17th is the big date in the calendar now. I just hope we don't get too much slop in the run up to that, which is possible. I think that's going to be like that's going to be a big Fed day move where we need to mark off the 15-minute bar. Let's just, we need to, let me get my pen. If you get a big 15-minute move, potentially need to wait until, let's say it's down, potentially need to wait until it creeps up into that. Try and short it, potentially, or even on a boomerang, complete retest, and then see if that can inch its way down and then start to really give us some decent moves. Any questions? Like I said, I mean, the markets, we could get a small rate rise, and the markets, even within the same day, could react quite well. All right, I'll see you tomorrow.